All right, video 2 of 2, starting with DXCM earnings in 4 days. The big dip was viable, I guess. It was cheap, and every time you bought it that cheap, you made money. Let me zoom out and I'll show you. Price to sales 11, price to sales 11, price to sales 7. In theory, you should be able to get a bounce up to 98. Not sure I would hold calls. I would more so sell puts to own shares. I don't know why it fell last earnings. I asked the question and I don't remember anyone answering it. But anyway, if you knew the company and you bought the dip, I would be solid here. Even if it goes to 45, I would double down there if I still believed in the business. We'll see. No good reason. Okay. 4 days, we'll find out what they feel about it. Elf on the shelf. It's a buy the poor earnings. They weren't that poor. I looked at them. They were not that poor. That's why I'm asking. I don't know what DXCM does, but so this is a buy the dip if you look at the chart. And if you look at the P&L, it's definitely not a sell the rally, sell the stock as deep as they did. So there's something else going on. You have to respect it. From the chart, I would have bought the dip and held it. So we have a earnings in 17 days, which scares me. One would think it should bounce back to like 135. We'll see. Anything above that, it was a short. If you followed me, it was a short. Look, credit call spread, debit put spread, clearly that was the right idea. And now wherever I put the debit put spread, it's going to be impossible to recover. I just cannot imagine how the stock will ever go back to 170 without a huge improvement on P&L or some headline of sorts. So from that perspective, I'm a trader, not an investor in this company. And I would expect a pop rather than a drop. But I'm not willing to risk money into the earnings. If it dips more, I would take it. If there was no earnings, I would be long. And earnings are coming up, I don't want it. Who is this? Ericsson? Okay, there's another mystery. Like, explain to me why this stock would rally 100% with this P&L. Someone just explained to me this. It sold off too much. Well, did it? Anyway, great recovery. If I was long, I would be out. If I invested in it for the breakout, the target is been delivered. This breakout played out already technically, and now you're going into this wild area. This is not for me. A stock like this is nauseating. You need a Dramamine to ride it out. It's just, look at this crazy price action with this stupid P&L. Just not for, it's not worth the effort. It's like having somebody in your life that is crazy, and you have the choice not to be with them. Why would you want to be with them? This is just crazy stuff right there. Maybe it pays a great dividend or something. I don't know what the reward is. It's just not for me. FDX going into resistance. By the way, I'm curious. Maybe we have it later. Where did it close? Oh my gosh, 135.93. So we were short at 136. I closed mine. I just couldn't stomach it anymore. I was like, I don't have time to dig around, mess around with this kind of a stock. So I just left it. It was profitable, but I left money on the table gladly. So I will not invest in FDX. This huge gap down, they're probably going to try to finish this white top hat that I did, probably. And so now it's approaching areas that I don't want to be long. Again, this is a boring P&L. This is boring, which is good for investors. Look at this price action. This is like Tesla. Bing, 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 all because of headlines. Labor this and labor that and labor this and labor that. It's like, why? Why bring it to your life when you have such consistency from the management, delivering such profits and out of like P&L, super consistent? Why do you express your price action hate and love for it like this? It's just nasty. It hit the target and now it hit support, and it's going to be darn near impossible to get back to 320, which what you should expect. So let's do this. Let's go from here to here. Just this is like a long period of time, right? And say, okay, this was the last Let's see. Maybe this is what happens. I have no idea. So it's just not for me. If you twist my arm to be long, I'd sell a put spread on a bad dip. Earnings anytime soon? Nope. FLR. Fluor. Okay, nice move on future hopes. Let's see. Let's hope him out. So I'm not so sure what the excitement is all about. Let me see if it's fallen from the okay. Now I know. All right, so let's just say you were part of the people that got long here, and this is your out. You think you're going to stay long? I wouldn't. I think this is an end spot rather than a starting spot. Earnings in 19 days. Yeah, it's just not for me. Buy the dip. First Solar, the only solar company I would consider trading with. Support zone from here to 160. $40, Nick? Yeah, that's the kind of stock it is. It was a short up there. I didn't dare short it, but I did share it. And anything below 190 is super strong support zone that extends through 140. And it's the only one that has a P&L that can speak for itself, especially on the cash. The rest are junk from a company perspective. So buy the dip, okay, but not all in, because if you lose 194, you're probably going to drift to the 70s, 170s, 175, 4, 6, something like that. So they could be looking for this area. And you could convince me to sell naked puts to buy shares in it on bad days. FXI I already discussed when we were at Baba. I'm short. I would think this bounce can get to 33.60, maybe 34 and fail, and they can probably come back down to 28. So I'm fighting the Fed of China, which is lunatic right now. They are full-blown QE and then some, but I think for good reason. They brought out the bazooka, the Fed of China, the Bank of China. So my trade is winning in spite of that, so I will manage my risk accordingly. I'm saying basically I wouldn't get long. You don't have to short it. You just avoid the long. GM has earnings in 2 days. They could surprise us with a message. I'm not too surprised with the income, but they could surprise us with a message. Ford is losing out big time in, I think, public opinion. I heard something on Pontiac coming back. That's lunacy. But they might have a strategic way of bringing it, and they probably pop on it. This is an easy breakout setup. All they have to say is just one BS thing on the earnings call and go, it'll be at 55. But I don't trade earnings. GOOGL. I'm concerned about Alphabet stock for the long term, in case you need a reminder of World War. I'm not concerned that like it's a crappy company or anything like that. I think they're losing out on the search. Like they lost my search. I hardly ever search on Google anymore. Hardly ever. Maybe for flights. And even that is going away. Why is this moving with my... What is going on here? So let's take out all the lines. I don't have to justify the P&L. It's beautiful. Buy the dip stock for sure. Anything around 150 is huge pivot. So I would expect it would need like some weird disaster for it to lose that. So we know we have a floor. So confident selling of puts to own shares below 150 for me. Definitely at 140 or lower for sure. Look at this nice consolidation. So let's say the market's correct 10%. This one could be in the 140s. It would be buy the dip moment. Conversely, you have to cut through a lot of resistance that are through 176. You can. This is Google. And let me see my... All right, so you see that in May, it had a huge, weird insanity stint of trading, enough for me to mark it in big blue box. Massive April earnings. This was one earnings report back in April. So we're clearly inside of a huge battleground. So be careful with it. Credit put spread, yes. Credit call spread, maybe yes. Buy the dips buy the dips as they happen. Invest for the long term. Home Depot, shortable. I don't care what anybody tells me. The consumer in the U.S. is stretched to the limit. I was at Home Depot yesterday. There was no one in the store. That doesn't mean that sales are going down. I'm just saying there's no one in the store on the weekend, and nobody's refinancing. I think Home Depot needs refinancing for people to pick up projects, and interest rates are not dropping. So new home, like if I buy a new house, I might need to remodel it. But I'm not so sure that's happening either. We'll see. It is shortable, but selling calls, Martin. I appreciate it. No, it's definitely a stock to respect. But like Caterpillar, you could strategically short it and come out okay. Like I would sell a call spread to finance a put spread of sorts. But I wouldn't buy naked puts to short it. How about I would avoid going long up here? That would be the best thing to do. HubSpot. At one point, I thought it was a good buy to dip, and this was a potential path. So we're in this part of it. This rally is hit a problem zone from which it collapsed the other time. So look, they filled this one out completely. So I will take the hash marks out so I'd know. Area of interest, they filled it. So now what? This could extend to 575, 576. It's not a good starting point. Maybe if it drifts a little bit lower to 490, 480, anything inside this cluster is doable. The P&L is pretty decent. So there's just price action. Wild stock. Anything above 580 is super difficult from a charts perspective. I don't know what that is. No idea. So this red W played out to 3 targets, and now it's going back into target 1 and 2 resistance. So anything above here, Fibonacci wise, says maybe not so much. You're gonna need a reason. Otherwise, you could probably retest 63. I think it's easier to get to 63 than 76. IBM. We will find out in 3 days what's going on. Hugely disappointing P&L from a company that big and that dominant. It's a beast. It creates a lot of money, but what? Dwindling comps for decades. And it's trading better than NVIDIA. Explain this. So I have tried to short it a few times, and I think the last time was a difficult one. I will try to short it one more time just because. And when I try to short something, it's with very limited risk, so I'm not getting obliterated, but it's pretty cool to trade it. I'm not going to trade it through the earnings unless I see something in the options chain that warrants it. One way to short a stock with confidence is to take a bet. Let's say I'm making up these numbers. Let's say I put 1,000 into puts. I'll spend 100 or 2 into shorter dated calls in case I'm completely wrong and it spikes to high heaven. I can get out immediately with minimal damage. But I'm not recommending it. But I'm just saying I would probably do something like that. Come to me during the live and the day of the earnings. It says here 3 days. So Samsara is too high to start longs. I mean, it's a consistent P&L. Again, puzzling price action, but it's a buy to dip moment. 41, super strong support. So I guess if I wanted to buy shares, I would rather sell puts in that zone than to buy shares. It's a buy to dip moment for a long time. So just put it on your to-do list. When it comes down to here, you buy the dip. I've never traded it, so I don't know how liquid it is on options. Johnson Controls, old name. Okay, so what's going on with my here? We have 1 day, 2 hours, 1 hour, 30. Oh, yep, and 15. Okay, now we're talking. Okay, on the 2-hour chart, this looks like the makeup of a breakout. Flagging, pennant, whatever. We have higher lows that broke out, and the target is much higher. And they're doing the same thing here on a smaller scale. So it looks like it wants to be at 82. And they're buying dips to get there. I wouldn't stand in its way. 17 days until earnings. JD, everything I said about FXI, BABA, all of those, same comments. Not for me up here. If I wanted to get long, I would wait until it goes below 33. I think it's easier to get to 33 than it is to 45 or 46. JK Solar, wouldn't touch it with a 10-foot pole. Earnings in 5 days. First Solar is coming up. Now, it could make you a lot of money. If you're a gambler on earnings, please feel free to go with your gut or whatever information you have. I wouldn't invest in it, honestly. Just look up at their look up their P&L and decide for yourself. Do we have time? Let's go check it out real quick. There's no margin, first of all. The cost of goods are down to here. And then operational costs are pretty good. Solar modules, mostly in China. The blue is China. Yeah, I thought convention was blue US. Okay. Blue in China. And let's see here. 8 billion of debt. Cash from operations. What? There's no information on trailing 12 months, so I would want to know that. I wouldn't proceed without knowing that. Total debt, all of its debt is outstanding. So if they liquidate the whole company, that all the debt will still exist. So it's just definitely not for me. Statistically speaking, yeah, there's nothing on this, the P&L that would allow me to invest in it. You would need to dig deeper than this piece of information that I just showed you. Not for me. It's a good thing that it came back to base, so it's not a short, but it's definitely a gamble to go long. Speaking gambling, so the earnings report was pretty solid, but I thought it was saying some things about the economy that are worrying about the consumer. I will be vindicated down the line or proven wrong. My assessment from that earnings report is that the consumer is tapped out and there are signs of default on the consumer side. So we'll see how that plays out. The stock is a beast, and I'm looking to short it on a pop, just trading the action. The company is amazing. They always deliver. And the chart has rewarded us pretty well in the past. So is this a breakout? Are you telling me that it's going to break out and go to 250 from here? All right, I would love to see that. I'm going to short the pop somewhere along the line. The way I would do it, sell a call spread if I'm not already short on a big green day, and or buy a put spread of sorts. It doesn't have to be a vertical. It can be any combination of things. The least I can say is it's not an easy starting point for investors up here. Where's the rush? Just buy the dip at least down to 215. If it goes anywhere below 205, it's a strong support zone with good fundamentals. So I'm not like fundamentally shorting the company. I'm just trading the stock price action. Are you kidding with this question? Yeah, I don't know what to say. Bye. What are we doing here? Do your homework. The chart's not going to help you. Lockheed Martin. So are we going to war or are we not going to war? Which is it? Either way, I think this one ends up in a disaster. So the P&L is super stable, great company. They're pretty well diversified. Earnings in 2 days. So what is the company going to say that the market is not yet imagined? And if we go to war, this stock will crash because all stocks will crash. If we don't go to war, then the stock is overpriced and the stock is likely to crash. Either way, I wouldn't get long here. Just put yourself to buy the dip. I wouldn't even buy it at 500 personally. I wouldn't get engaged with it until it reaches the low 400s. For me, my taste, this is an overshoot. Until they show me the P&L path or they tell me the P&L path. Like when the company says, okay, we're going to double our income, then I'll say, okay, then you deserve to be double the price you were like a few months ago. Until then, why is it now double when there's no hint of it in the P&L and the company needs to say how that makes sense? It's a no touch. Lowe's, if I think Home Depot is a short, I definitely think this one's a short. Lowe's is one of very few companies that went bankrupt and left my town. I live in a pretty affluent town, and nothing goes away. This one and Five Below, the only two companies that I know, came in and left. The Home Depot, thriving. This one, kaput. So I honestly don't know anything about it as far as the chart. I've traded it maybe 3 times in my life, and this is not an obvious entry point. It looks like it just broke out, so give it some room. May get to 310. And if you're looking to invest in it, I think you could wait for a decent pullback. Let's go to a daily chart, maybe get information. Just buy the dip, and you can buy the dip across many different levels, depends on your speed of trading. Decent P&L, looks like they're making the turnaround on a quarterly basis. That's pretty good. So it's a good company. No reason to panic into it. Lam Research is like the opposite of Lowe's. P&L is amazing. Growth is kind of there. Buy the dip moment on Lam Research, and earnings are in 3 days. I wouldn't touch it. So luckily, it's split. So this is the one time where I could say, okay, you can sell puts to own shares even through the earnings. Let's say you love Lam Research here, and you're confident for it for the next few years. Then you would be okay to sell puts setup into the earnings. Come into the live, we can discuss it. I'm a buy the dip guy on this one for sure. If I'm invested in here, I'm not scared. Even if it drops 10, 15, 20% from here, that wouldn't scare me out of my investment. And if it does drop, I'm a put seller all day, because over the long term, this has proven itself. Meanwhile, the chart, even though it's only $68 or $70, this was 10 times more just a few days ago. So it's split right there, 10 to 1. So this is a high ticket item, and just look at the chart. We broke out from 72 after multiple times, and this is our first test of it. We could come down to 56 or 58 or 60. So if I sell a put, I want to know that I can absorb that. Okay. LULU, it was a buy the dip moment. I did buy the dip. I think I sent out sell puts or put spreads in it, and that's played out. Up here, I'm not that great and not that in love with it. The P&L is not awesome. Okay, that's too jaggedy on the quarterly basis for my taste. Over year, yes, they step up to the plate. What is going on here? So they had, maybe it's just one peak. So it's good to own. If you bought the dip as an investment, you did well. No need to add here. I wouldn't short it, and I would buy the dip if I'm not involved in it. And if I want to own it for the long term, and I buy 20% of my shares right now, I'm not crazy. If I wanted to own shares, I should consider a stock replacement strategy or synthetic stock, which is selling a put, buying a call, spread of sorts. Join me in the live. I can put you on the right path. Lamb Weston. Wow, that's a pretty active stock for a P&L that's fairly stable. Look how consistent they are in selling rallies. Wow, you could have copied this thing over, and look, let's see, from here to here. You say, okay, I was traveling and then I fell and then I bounced and then I fell some more. So yikes. I'm not going to say that's going to happen again, but that zone is difficult to go long into. Anything around 84, not for me. McDonald's. Okay, so we had a put position. We shorted it nicely based on the chart, was working fine, and then one day out of the blue it gets upgraded by like 6 companies at the same time. I've never seen that I remember, where they do it and there's no earnings report. They just all decided to do it in one day. They release these reports. This is how Wall Street is rigged. So clearly I'm bearish, and I do have a bearish bet, and it's pretty red. So was I bearish depends on whether I get out or not. My bearish position is a bear call spread and a bull put spread. I mean, a bear call spread and a bear put spread. So it could still work out, but it's definitely, if I haven't stopped out, it means that I didn't take a sizable position. I can manage the risk size in order to get out of it with minimal damage. If you need details on that, reach out, come into the live room. I'm there all day, all day. All you need is just carve out 10 minutes of your time, pop in, and I'll help you manage it. Okay. Chart-wise, I can't explain it. I cannot explain it. This P&L is solid. Company is beautiful. But again, breaking out into all-time highs. Technically, the breakout from here has 340, 350 as a target. So you need to be cognizant of that, okay? On a weekly basis, this is a buy the dip moment, and it's bigger than prior moments. So it's extended from that perspective. I'm not going to double down or anything, but I'm intrigued in seeing how this will turn out. Earnings in 9 days, which is unfortunate. Okay. I'll check it out on my books and see what I decide to do with mine. I'll reach out. Meta. I wouldn't touch this stock unless I'm an investor for the super long term and on dips, to be honest. The P&L right now is solid, bulletproof. And then they tell us that they're going to bring in this other thing that's going to bring even more money to the table. So how can you short that? And it's everybody's long it. That's also a risk. So support zones, 540, 530. Better support zone, anything below 500. Incredible opportunity, anything below 400 or in the low 400s. If the markets crash, this might have a fast track to crashing. I have no idea. I don't know how it's going to behave in a crashing market. If we ever get a red tick that holds more than 12 hours, we have not. 12 hours of red, that's all we've taken, and then boom, new high. So it's a good hold for the long term, as long as they don't go crazy. I think it's a scam, to be honest. A lot of elements of its business is scamish, at least on like Marketplace and Insta scam, as I call it, Instagram. Don't buy anything off of Instagram. You're not going to get what you pay for. You're going to get fake stuff, no joke, and they don't do anything about it. They still sell it. So I don't know when that will blow up in their face, but maybe never. I'm intrigued. So I'm not in it either way, long or short. Monster beverage, as I take a sip of my C4. 51, 50, and 49, decent short-term support. Everything above here, resistance. Looks like it wants to break out. If you're a trader and you want to chase the breakout, I think it's easier to buy the dip into 51 or 52. So you can curl back up and pop. Let me see if I have lines on that. Okay, so from here they popped and they exceeded prior resistance. That's good news. See, this is what the comments were. And the target is either here or there. So we have resistance and support. So it looks like they want to drift towards the resistance higher. So I would be in this kind of mode. So you can come back up. Okay, so let me give you a visual. Now that they've committed to breaking out, so as long as you stay above 52, the way I would draw that, as long as you stay above 52, you can do this. Microsoft, premier company, clearly, and it's underperforming. It's weird. Look how tight it is. Something is about to happen, just like Boeing. Super tight. So 440 or 400? 395. I don't know. Lower lows, higher highs, big tightening, like the purple one we did in Boeing. So you go from trading this wide to this wide. Big energy built up. So 440 or Great, Nick. You tell us it could go up and could go down. I'm telling you something is about to happen. And if you're long, you shouldn't be scared. It's a good company. If it dips, you got long wherever you are. But it's a solid buy to dip company. I would choose it above all other companies right now. I think it's more stable than NVIDIA, although NVIDIA is faster growing. And it's better than Apple for sure. So long term, it's not wrong to start a position in Microsoft. Long term. However you do it, you buy a little shares, you sell a few puts, you buy a synthetic long. As long as you're not going all in, I'm fine with it here. Folks, we haven't had a red tick carry more than a day in so long. I'm afraid up here to go in all in on anything. So yes, awesome company, but I wouldn't pile in. If I had 10,000 to invest in Microsoft and that's it, I wouldn't put more than 2 right now. MSTR, I would not touch it up here. It's again, everything I said about coin is even more true here. The good thing about it is that management is great. The guy that leads it is amazing. Listen to him to learn about crypto, actually learn about money in general. But up here, it's too expensive, way too expensive. So I said a long time ago how I would trade MSTR and you would have made a lot of money pre-split. And now that's still doable now. But I'm not going to mention it here. It's too dangerous to mention. But if you want me to repeat it in the live room, I would, not out here. Micron. I'm curious. Where's my friend Micron doing? Okay. So the technical opportunity is them breaking out of 116-ish. You can probably recover 130. Higher lows knocking on the prior roof. But this is a lot of chop above. So I don't think it's going to be easy. It's doable, but it's not going to be easy. The last 3-quarter reports are good. They're showing a recovery trend. The margins are getting better. I don't have any beef with it. Going long, maybe. Selling puts. Selling a put spread. I did not miss CELH. I did the stocks as they were reported. I did CELH. And let's see here. This one is no rush for me. I mean, I would rather be long Microsoft than this one. Netflix, all in. I'm all in. No, I'm not. No touchy. No touchy. Why not? So I knew that this was a good company. And whatever they said, I need to go look at the numbers. No, what are you shorting? What are we shorting? If you want to short it because it's popping, then just buy a put spread and get out if it doesn't work. Don't short with conviction. The P&L is, look at it. This guy is amazing. I don't like him, but whoa. So he forced Wall Street to look at his company from a financial performance, regardless of how many people. Like the initial reaction in our live room was like big miss on Netflix. And I'm thinking, okay, let's wait to see what the numbers were, big miss. And if somebody sold it because of the big miss, they're in deep pain right now. So there was no miss, and who cares if it missed or not? They said, oh, okay, so the number of subscribers, whatever. Like, who cares if they're delivering this P&L with 1 subscriber or a zillion? I wouldn't judge it. If I hire somebody and say, hey, go make me money, whether they make it digging graves or selling candy on the side of the street, I wouldn't care. If it's legal and they're bringing in the money, I wouldn't say, oh, wouldn't you do better? No, just take the P&L. So this is a no touch for me. You missed it if you wanted to get long. Wait for a dip. Anything below 725 is solid support. Anything inside this candle is solid support. Actually, look at it. Look left. Look at this. I don't know why I did this, but perfect. This box is still solid. Take a long inside this box. Nike, underachiever as a stock. And the company P&L is still solid. Okay, you can see some sort of a deterioration slight on the sales. They tell me they're having another crisis. Every time they have a crisis, they come out of it like champions. As an investment for the long term, it was definitely a buy the dip. I would have bought half my position, and let's say if it falls below 64 at some point, I would probably start adding to it. For the long term, I could get started, but again, it's doing this when markets are not able to stop making higher highs, which is concerning. ServiceNow, buy the dip. That's all I can tell you. It's a very steep rally, super strong breakout on a weekly basis as well. So it's definitely not a short, but it's definitely not a long up here. So if you twist my arm, I would buy the dip. Earnings in 3 days, so I wouldn't do anything until the earnings. And if they fall on earnings, I would buy the dip. NU Holding, what is that? Is this a diet company? No. Oh, I always say that. I confuse it with that other one. Anyway, fintech I do like. Stock-wise, this looks like a lot of resistance above. They're struggling to break out of 15. Sell puts to own shares. Yeah, let me see. That is a steep trend, man. Whew. Okay, so if... I haven't traded this, so I'm going to put alerts for myself to sell puts on dips and take shares. I don't like it up here. I wouldn't short it, but I don't like it. Closer to 1250, maybe. Below 1150, maybe. Below 1050, definitely. NVIDIA, you've heard of it, right? Okay. So it hit our target of 140, and I believe that was an all-time high. And this is not an obvious entry point from a chart perspective, not knowing what this company is. But if you look at the P&L, all bets are off. This could be 170 and 190. It would still be not overpriced. So if the markets are higher in the future, this one is higher in the future. And there is no market rally without this one rallying as well. So it is still the market. The market is NVIDIA. It bailed out the market in August, September, multiple times in October already. Last week, the champion was not it for a change. It was the XLF. This one contributed, but the XLF bailed the market last week in a mind-blowing way. I have never seen the XLF do what it did last week, so I stand corrected on them not following through after the earnings. We'll see. Look at the net income of this company. You just look at the net income of this company. Anybody shorting it from a fundamental basis knows that there's something wrong with their architecture for the future. The net income is larger than the sales a year ago. Say it with me. The net income is larger than the sales a year ago, which was, I believe, a 40% increase from 3 months before that. Chew on these words. These words have never been uttered before at a company that's $3 trillion. That is a guarantee. I don't think this will ever happen again. This is a one and done thing. It's a freak show. Wow. I'm getting excited. So if you own it, keep it. Sell covered calls, but keep it. Okay, NYCB. Not for me up here. I would be interested in it around 1150. They're selling rallies, buying dips, I should say. Just rinse and repeat. Oak. Wow. I mean, what is going on with this market? Are we ever going to have a red tip? How are we going to make money when the upside is guaranteed? Where is going to be the reward when there's no risk? There's no risk being priced into the market. Okay. It's in breakout. What are you asking? Investing? Go for it. Not for me. When will I touch it? For me personally, 87. So if I can sell puts in the mid 80s and make a living out of that, I would. Earnings in 9 days. Let's see what happens. I'm speechless. Okay. What's the question? There is no income, nothing but spending. Do your homework, own the company or not. The chart's not going to be a matter. OKTA, I would buy the dip. It's inside of a zone where I would own it. And if I was an investor, if I was looking to invest 100 shares, I would buy 50 of them. And if it falls, it could fall hard. And then I will add the second 50. If not, I'm in like Flynn. Earnings anytime soon? 38 days. You could convince me. So it had a support zone it lost. It has a secondary support zone where now the problem is all the resistance above. So if you're expecting a lot of upside, maybe you can get $2 to $4, $6 maybe easy. And after that, it's going to be a struggle. But it's worth owning down here. With that, we end video 2.